What if I told you that a 300-year-old technique from Japanese rice traders could give you a decisive edge in today's fast-paced markets? While most traders chase complex algorithms, the smartest ones are turning to ancient wisdom, Japanese candlesticks, to read market psychology like an open book. In this video, we'll uncover the exact techniques that Wall Street pros use to anticipate market reversals, spot hidden opportunities, and outsmart the crowd. Stick around, because by the end of this video, you won't just understand candlestick charts. You'll see the markets differently forever. Hey everyone, welcome to Book Loom, where powerful books meet practical minds. We break down world-class books into clear, engaging, and educational summaries so you can apply the most valuable insights to your trading, business, and life. If you love learning deeply in just 20 minutes, hit subscribe, because we've got a whole library waiting for you. Today's book is a game changer for traders, Japanese Candlestick Charting Techniques by Steve Nison, the book that introduced candlesticks to the Western world. Let's break it down, chapter by chapter. Chapter 1. Introduction to Candlestick Charts. Imagine this. You're staring at a traditional bar chart, trying to make sense of 1,000 tiny lines, each one telling you what happened in the market, but none of them really speaking to you. It feels robotic, cold, and disconnected. Now, picture this instead. A chart that breathes, that tells a story, that reveals the emotions of traders battling in the market, fear, greed, hesitation, and confidence, all captured in a single, elegant shape. Welcome to the world of Japanese candlestick charts. The birth of a timeless tool. In this opening chapter, Steve Nison doesn't just introduce a charting method, he reveals a powerful trading language that dates back over 300 years. Developed by Japanese rice traders like Munehisa Homa, candlestick charts were used to predict price movement based on psychology and sentiment long before Western technical analysis even existed. These rice traders realized something profound. Markets are driven not just by numbers, but by people. They created a method that shows not only where the price has been, but how it got there and why it might change. And now, thanks to Nison, this once secret knowledge is available to traders around the world. Why candlesticks matter. Today, Nison emphasizes a key idea. Candlestick charts don't replace your current tools. They amplify them. You can still use your favorite indicators, RSI, MACD, moving averages, but with candlesticks, you get a visual and emotional edge. Each candlestick tells a story of the battle between bulls and bears in a way bar charts never could. A long white or green body, bulls are confident. A small body with long shadows, the market is indecisive. A sudden shift in body size, a reversal may be coming. This is what makes candlestick charts so intuitive and powerful. They give you instant clarity and let you feel the pulse of the market. What makes candlestick charts unique? They're visual. You don't just analyze them, you see them. They reveal sentiment. You learn what traders are feeling, not just what price is doing. They work across markets. Stocks, forex, futures, crypto, candlesticks are universal. They provide early warning signals. Reversal and continuation patterns give you a head start before the crowd reacts. Most importantly, candlesticks focus on price action, not lagging indicators. This makes them an ideal companion for real-time decisions in a fast-moving market. The big takeaway. Steve Nison sets the stage perfectly in this first chapter. Candlesticks are more than chart patterns. They're expressions of market psychology. And once you learn to interpret these expressions, you begin to see opportunities others miss in plain sight. You don't just become a chart reader, you become a market translator. Now that you know what candlesticks are and why they matter, let's go one level deeper. Here's the question. What exactly makes up a single candlestick? What's the difference between the body and the shadows? And how can one candle, standing alone, give you a complete picture of market power? You'll find all the answers, and more, in Chapter 2, where we break down the anatomy of the candlestick line and learn how to read market emotion in just one glance. Chapter 2. Constructing the Candlestick Line. So, what if I told you that one candle, just one candlestick on your chart, can whisper everything the market is feeling: uncertainty, aggression, fear, or strength? In Chapter 1, we learned how candlestick charts give us a psychological edge. Now in Chapter 2, we pull back the curtain and look at what each candlestick is made of and how that construction gives us superpowers in market analysis. The core of a candle. 4 vital ingredients. Steve Nison breaks it down simply. Every candlestick, no matter how simple or complex, represents 4 price points during a specific time frame, be it 1 minute, 1 day, or 1 month. 1. Open. 2. High. 3. Low. 4. Close. These 4 points create the shape and message of the candlestick. The body of the candle is formed by the open and close prices. The wicks, or shadows, are the thin lines extending above and below the body, formed by the high and low prices. This simple structure holds deep meaning. White body versus black body, or green versus red. When the close is higher than the open, you get a white or green candlestick. This means bullish pressure. Buyers were stronger. When the close is lower than the open, the candlestick is black or red. This reveals bearish sentiment. Sellers were in control. And here's where things get interesting. The size of the body shows how strong the conviction was. A long body means strong buying or selling pressure. A short body reflects hesitation, uncertainty, or a tug of war between bulls and bears. The shadows speak too. Now, let's talk about those upper and lower wicks, what Nison calls the shadows. A long upper shadow tells you that bulls tried to push prices higher but were overpowered. A long lower shadow reveals that bears had control early on but were eventually beaten back. The shadows show the hidden struggle behind the scenes, who had the upper hand, who lost it, and how quickly sentiment shifted. So a candlestick doesn't just say what happened, it shows you how it happened. That's what makes them emotionally powerful. Real-world insight from one candle. Let's say you see a long white candle with no upper or lower shadows. That tells you bulls took control from the open and never let go. Now imagine a small-bodied candle with long shadows above and below. That's the market saying, we don't know where we're going yet. That's indecision, and it can be a warning of a big move coming. The emotional blueprint of price. Steve Nison teaches that each candle is a mirror of crowd behavior, the optimism, fear, greed, and doubt that drive every market move. Once you learn to read a candlestick like this, you no longer see charts. You see human nature in motion. Now that you know how candlesticks are constructed, and how every candle reflects a mini-story of battle between bulls and bears, here's the burning question. What happens when these individual candlesticks start forming patterns? What hidden signals appear when 2 or 3 candles work together? Could those patterns predict market reversals or confirm trends before indicators react? We'll explore exactly that in Chapter 3, Reversal Patterns, where you'll learn how to spot early turning points with just a glance. Chapter 3, Reversal Patterns. Let's play a game. Imagine you're standing on a crowded trading floor. Prices are rising fast. Everyone's celebrating. Then, without warning, the momentum dies. The mood shifts. Buyers hesitate. Sellers step in. But how do you see that shift before it's too late? Welcome to the world of candlestick reversal patterns, the powerful signals that show when a trend is about to end and a new one is about to begin. In Chapter 3, Steve Nison teaches us how to read the market's turning points like a pro, and how candlestick patterns give you an early warning before the rest of the world catches on. What are reversal patterns? A reversal pattern is a group of 1, 2, or 3 candlesticks that signals the market might be about to change direction. from up to down or from down to up. These patterns are crucial because if you spot one early, you can lock in profits before a reversal eats them away. You can enter trades at the beginning of a new trend. And here's the kicker. Candlestick reversal patterns often appear before any Western indicator gives a signal. But here's a warning from Nison. Not every reversal pattern guarantees a reversal. Steve emphasizes this. A reversal pattern does not mean the trend will reverse. It means the potential for reversal exists. Context is key. Where the pattern appears, what the prior trend was, and whether volume supports the move, all of these matter. The key elements of a valid reversal pattern. Steve highlights 3 critical ingredients. 1. A prior trend. There must be an existing trend, either up or down. No trend equals no reversal. 2. A reversal signal, 1 or more candlesticks that show a potential shift in momentum. 3rd confirmation, a follow-through candle or volume spike that confirms the reversal. Famous reversal patterns you need to know. Here are a few of the most powerful reversal patterns Nison introduces. 1. Hammer and hanging man. Both have a small, real body and a long lower shadow. Hammer, bullish after a downtrend. Hanging man, bearish after an uptrend. Both suggest a possible reversal, but need confirmation. 2. Engulfing patterns. Bullish engulfing. A small red candle followed by a large green one that engulfs it. Sign of strength. Bearish engulfing. A small green candle followed by a larger red one. Warning of weakness. Engulfing patterns scream, momentum is shifting. 3. Dark cloud cover and piercing pattern. These are 2 candle patterns where the second candle penetrates the first, signaling hesitation and a likely change. 4. Doji. A candle where the open and close are nearly equal, indecision at its peak. When found after a strong trend, a doji can be a tipping point. Why these patterns matter. Candlestick reversal patterns give you an emotional X-ray of the market. They show hesitation after confidence, strength after weakness, or panic after euphoria. They give you a head start. Instead of reacting late, you act just in time. Now that you've seen how reversal patterns work and how they can give you a critical edge in timing trades, here's the burning question. What happens when the market isn't reversing, but continuing its trend? Are there candlestick patterns that can confirm a trend is healthy and still strong? In the next chapter, we dive into continuation patterns, the tools that tell you, don't exit yet. The trend is far from over. Chapter 4. Continuation patterns. Here's a scenario we all fear. You're in a trade. The trend is in your favor. Profits are growing. Then, the market pauses. A few uncertain candles form. You wonder, is this the end of the trend? Should I exit now? But what if that pause wasn't a warning sign? What if it was a momentary breather before the trend roars back stronger? Welcome to continuation patterns, candlestick formations that don't warn of a reversal, but instead signal the trend is still alive and might just be gaining strength. What are continuation patterns? Steve Nison defines continuation patterns as temporary pauses or sideways moves in an ongoing trend. They're like pit stops in a race, brief moments of rest before the next big push. While reversal patterns signal that a trend may end, continuation patterns suggest that the trend will likely continue. And if you can spot them early, you can. Stay in your winning trades longer. Avoid premature exits. Add to your position with confidence. Key characteristics of continuation patterns. According to Nison, continuation patterns often appear after strong price moves, have small real bodies indicating indecision or consolidation, are short-term pauses, not full-blown trend changes, require confirmation through price movement in the direction of the trend. Context is once again king. These patterns mean nothing without a strong trend preceding them. Common continuation patterns explained. Here are the most popular ones that Steve highlights. 1. Rising 3 methods. Starts with a long bullish candle, followed by a few small-bodied bearish or neutral candles. Ends with another strong bullish candle that closes above the first one. This pattern shows bulls are simply resting, then taking control again. 2. Falling 3 methods. Begins with a large bearish candle, followed by a few small bullish or neutral candles. Ends with another long bearish candle that closes lower. The bears never lost control, just paused before striking again. 3. Doji. Within a trend. A single doji might signal indecision, but if it appears within a strong trend and is followed by a confirming candle, it can mean momentary hesitation, not reversal. 4. Side-by-side white lines. 2 strong white bullish candles side by side in an uptrend suggests steady continuation of bullish momentum. These formations are not about dramatic turnarounds. They're about trusting the trend and knowing the difference between a real threat and a temporary slowdown. Why these patterns matter. Traders often get shaken out of strong trends during natural pullbacks or pauses. Continuation patterns are your anchor. They give you the psychological edge to stay calm when others panic, to hold strong when the trend is merely catching its breath. Now that you've learned how to identify when a trend is taking a short break instead of ending, here's the next big question. What happens when candlestick patterns overlap with Western technical tools like moving averages or RSI? Can combining both methods give you even higher probability trades? In the next chapter, Steve Nison reveals how candlestick charts work hand in hand with Western indicators, giving you the best of both worlds. Chapter 5. Stars and Windows. Ever looked up at the night sky and seen a lone star shining right before dawn? It's silent, beautiful, and powerful. In the world of trading, a star candlestick is just like that. It quietly appears on your chart, and if you recognize it in time, it can signal a massive market shift or a golden chance to ride the next big wave. In this chapter, Steve Nison introduces us to stars and windows, 2 of the most powerful candlestick formations used by professionals to spot trend reversals and trend continuations with stunning accuracy. What are stars? In candlestick terms, a star is a small-bodied candle that gaps away from the previous real body. It often appears after a strong trend, either up or down, and it's a signal that something is about to change. Stars are usually part of 3 candle reversal patterns, and here are some of the most important types. 1. Morning star, bullish reversal. Comes after a downtrend. Pattern, big red candle. Small real body, the star, big green candle. Signals the bears are losing steam and the bulls are stepping in. 2. Evening star, bearish reversal. Appears after an uptrend. Pattern, big green candle, small real body, big red candle. Warns that bullish momentum is fading fast. 3. Doji stars. Same as morning, evening stars, but the middle candle is a doji, meaning extreme indecision. These are even more powerful, especially when confirmed by the 3rd candle. Nison emphasizes that the psychological story behind the star is key. It's a sign that the dominant trend is stalling, and a new force may be taking over. What are windows, aka gaps? In Japanese candlestick terminology, a window is what Western traders call a gap, when the market opens significantly above or below the previous candle's range, leaving empty space on the chart. And here's the twist. In candlestick analysis, windows are treated like support or resistance levels. That means rising window, gap up, acts as support during an uptrend. Falling window, gap down, acts as resistance during a downtrend. Once a window opens, watch it closely. If the market pulls back toward that level and holds, it's a great spot to enter in the direction of the original trend. Steve highlights that not all gaps are equal, but when a window appears in the middle of a candlestick continuation or reversal setup, it amplifies the pattern's power. How to use stars and windows effectively. Look for confirmation candles. Don't act on a star or window alone. Always check the trend context. A morning star is useless in a flat market. Combine these patterns with support resistance levels or volume analysis to strengthen your edge. These formations aren't just technical, they're psychological. They tell the story of a market that's hesitating, breaking, or gathering strength. Now you've discovered how stars can reveal the moment trends start to shift, and how windows give us insight into momentum and support resistance zones. But what about the size and shape of candlesticks themselves? Can the length of shadows or width of real bodies reveal hidden buyer and seller emotions? In the next chapter, we'll uncover the psychological depth of candlestick anatomy, where every shadow and wick tells a story the price alone can't show. Stay tuned. The next chapter might change how you look at every candlestick you've ever seen. Chapter 6. Combining candlesticks with Western techniques. Imagine this. You've mastered candlestick patterns, the doji, the hammer, the engulfing. You can almost feel the market's heartbeat in every candle. But then, the RSI flashes overbought. Your moving average says the trend's still strong. What now? Which do you trust? Here's the truth. Candlesticks and Western indicators are not rivals. They're teammates. And when you combine them correctly, you unlock a trading edge that's sharper, smarter, and more confident. Welcome to Chapter 6, where East meets West, and your trading strategy gets supercharged. The best of both worlds. Steve Nison emphasizes that while candlesticks offer visual storytelling and short-term clues, Western tools like moving averages, trend lines, RSI, and MACD offer structure and confirmation. Used together, they confirm each other's signals, filter out false patterns, give you multiple layers of evidence before entering a trade. Let's break it down. Moving averages plus candlesticks. A candlestick pattern near a key moving average, like the 50 or 200 day, adds context. For example, a bullish engulfing pattern bouncing off the 200-day moving average? That's not just bullish, it's a high probability entry. A doji forming far above the moving average? Potential overextension, and a heads up for a reversal. Nison teaches us, don't view candlesticks in isolation. Place them on the map of Western tools. Trend lines and support resistance candlesticks become even more powerful when they appear at key levels. A hammer at a strong support zone? A shooting star at a trend line? That's the market flashing a neon sign. Something is about to change. Nison explains that combining candlesticks with horizontal levels is one of the most effective methods traders use for entries and exits. Oscillators, RSI, stochastics, MACD. These Western tools measure momentum and overbought, oversold conditions. Steve shows how a candlestick reversal, like a morning star, becomes far more reliable when it aligns with an oversold RSI. Or when a bearish engulfing appears and the MACD crosses down, you now have double confirmation from East and West. This synergy is where good trades become great. Real-world example. Let's say, price hits resistance. RSI is overbought. A bearish engulfing candle forms individually, each is a signal, but together they form a high-conviction trade setup. That's the magic of merging methodologies. Why this matters. Candlestick charts show emotion. Western indicators provide logic and structure. Steve Nison's message is clear. Use them together, not separately. When you blend intuitive Eastern visuals with rule-based Western techniques, you build a strategy that's balanced, powerful, and disciplined. Now that you know how to combine candlesticks with moving averages, RSI, MACD, and trend lines to craft smarter trades, here's the next burning question. How do you separate strong candlestick signals from the weak and unreliable ones? Which patterns are trustworthy, and which are just noise? In the next chapter, We dive deep into filtering and validating candlestick signals, so you only act on the most reliable trades and avoid getting faked out. Stick with us, because precision is power. Chapter 7. Trading Tactics with Candlesticks. What if I told you candlestick patterns aren't just for identifying trends or spotting reversals, but for building a complete trading strategy, from entry to exit? That's what Steve Nison unpacks in Chapter 7, turning your candle knowledge into real-world trading tactics. This chapter isn't about learning new patterns, it's about using what you know to trade smarter, faster, and with more confidence. From pattern to profit, the candlestick mindset. Nison begins by explaining that candlesticks are tools, not magic. They don't work in isolation, and no single candle guarantees profit. But when used tactically, they become your compass in the market jungle. The key? Combine pattern recognition with risk management, confirmation, and discipline. Let's break down the trading tactics that matter. 1. Entry points. Don't jump the gun. A big mistake traders make is jumping into a trade as soon as a pattern appears. But Nison teaches us that confirmation is critical. Wait for the next candle to support the pattern. Watch for volume surges. Look for agreement with support, resistance, or indicators. Example, a hammer at a support zone. Wait for a bullish candle next day to confirm the bounce. That's a tactical entry, not a guess. Second, stop-loss placement. Protect the downside. Steve emphasizes that every trade needs a safety net. Candlesticks help place logical stop-losses. For bullish setups, place your stop just below the pattern's low. For bearish setups, place it just above the pattern's high. This way, if the market proves you wrong, your risk is minimal, and you live to trade another day. 3. Price targets. Exit. Like a pro, candlesticks help you identify potential exits, not just entries. Nison recommends combining chart patterns, like flags or double tops, Fibonacci retracement levels, prior support, resistance zones. Example, you enter on a morning star reversal. Look for the next resistance or use the height of the pattern to project your target. 4. Trade size and risk, the tactical balance. A true professional doesn't just focus on winning trades, they manage risk per trade. Steve encourages you to risk a fixed percentage of your capital per trade, e.g., 1 to 2%. Adjust position size based on stop-loss distance. This way, one bad trade won't wreck your account, and you stay in the game longer. 5th, emotion versus execution. Perhaps the most underrated tactic? Controlling your emotions. Candlesticks give visual clarity, but it's your mindset that controls execution. Stay objective, follow the signal, trust the system. Nison warns against overtrading or forcing trades when no clear signal exists. Real-life integration. Steve walks us through real chart examples, showing how combining these tactics reduces emotional decision-making, increases consistency, builds a repeatable trading plan. Candlestick knowledge becomes actionable when backed by rules and structure. Final thought plus curiosity hook. Now that you've learned how to enter, exit, and manage risk using candlesticks with precision, you're not just reading the market, you're strategizing it. But here's the next big question. What if the market gives you conflicting signals? What do you do when candlesticks say one thing, but your indicators or time frames say another? In the next chapter, we'll dive into the world of candlestick conflicts, multiple time frames, and how to navigate complex market signals like a pro. Stick around, because real mastery begins where the charts get messy. Chapter 8. Psychology behind the patterns. Ever wonder what a candlestick really represents? It's not just price movement, it's fear, greed, hope, and panic, captured in a single shape. In this chapter, Steve Nison uncovers the human psychology behind candlestick patterns. Because if you understand what traders are thinking, you don't just react, you anticipate. Let's decode the emotions behind the candles. Candlesticks are emotion maps. Each candlestick is a visual snapshot of the battle between bulls and bears. Long white, green candles, bulls in control, optimism rising. Long black, red candles, bears dominating, fear or pessimism kicking in. Doji, indecision, a tug of war where neither side wins. Steve teaches that every pattern tells a psychological story, and reading that story is your edge. Reversal patterns, psychology of a power shift. Let's take the hammer as an example. What's really happening here? 1. Sellers slam the price down early in the session. 2. Buyers fight back, pushing price back up by the close. 3. Emotionally, the bears lose momentum and bulls gain confidence. A hammer isn't just a shape. It's a moment of emotional defeat for bears. It often signals the beginning of a shift in market sentiment. Same with a shooting star. It shows bullish enthusiasm fading and doubt creeping in. Doji and spinning tops, traders' confusion on display. These candles signal indecision, but emotionally, they're much deeper. They reveal a loss of conviction, a pause in momentum, a brewing storm of emotional uncertainty. Traders don't know whether to buy or sell, creating the perfect setup for trend reversals or breakouts. Steve emphasizes that these candles are psychological pressure cookers, and when they break, the move is often explosive. Bearish patterns. When greed turns to fear. Patterns like the dark cloud cover or bearish engulfing show a sudden collapse in buyer confidence. Buyers were once hopeful, but a single powerful bearish candle shatters that belief. The psychology? Panic sets in. Smart traders recognize that shift and act before the crowd catches up. Bullish patterns, when fear turns to optimism. Take the morning star pattern. It begins with despair. Then comes a pause, and finally, a strong bullish candle that signals hope returning to the market. Nison reminds us that candlestick patterns reflect collective emotions, which often repeat because humans are emotional creatures. Why psychology equals precision. When you understand what traders are feeling, patterns become more than shapes. They become predictive tools. Steve encourages you to think like this. What are traders expecting right now? Is that expectation being challenged? Are we seeing fear or confidence? This mindset helps you anticipate moves with more confidence and avoid traps where emotion clouds judgment. Now that you understand the psychology behind candlestick patterns, you're no longer just a chart reader, you're a market psychologist. But this raises a critical next question. How can you strengthen your own trading psychology? Because understanding the crowd is one thing. But controlling your own emotions when money's on the line? That's where true mastery begins. In the next chapter, we dive into the mental discipline of a candlestick trader, how to stay calm, focused, and unemotional even when the market gets wild. Chapter 9, Real-World Examples. So, you've learned the patterns, you understand the psychology. But here's the big question. Can these candlestick patterns actually work in the real world? That's exactly what Steve Nison answers in this pivotal chapter. Welcome to the proving ground, where classroom concepts meet real market action. And spoiler alert, candlesticks don't just work, they shine. Turning knowledge into action. This chapter is all about bridging the gap between theory and practice. Steve takes us through live chart examples, showing how candlestick patterns play out in actual trading situations across different markets and time frames. You'll see how a morning star predicted a market bottom, how a bearish engulfing marked the end of a rally, and how a simple doji warned of trend exhaustion right before prices reversed. This chapter proves one thing loud and clear. When you understand candlesticks, you're no longer guessing. You're reading the market's intentions. The power of confluence. In these real-world examples, Steve shows how candlestick patterns become more powerful when they align with support and resistance zones. They appear after an extended trend. They confirm signals from Western indicators like moving averages, RSI, or trend lines. For instance, a hammer at a major support level? Not just a pattern, a screaming buy signal. A shooting star right near a resistance zone? Not just a red candle, a warning flare. The lesson? Context plus candlestick equals confidence. Timing market turns with precision. Steve includes examples where candlestick signals nailed market reversals to the day, long before the broader market or lagging indicators caught on. In one case, a bearish harami appeared just before a major drop, allowing proactive traders to exit with profits or even flip short. These aren't cherry-picked moments. They're repeatable patterns that anyone can spot, if you know what to look for. Practical applications. This chapter isn't just about looking back. It's about learning how to spot entry signals, set smarter stop losses, confirm trends or reversals using candles alone, avoid false signals by waiting for confirmation. Steve emphasizes patience. A pattern alone isn't enough. Wait for follow-through. A bullish signal needs a strong next candle. A reversal isn't real until the market shows its hand. In these examples, you'll learn to think like a strategist, not a gambler. Key takeaway. Theory is a map. Real-world charts? That's the terrain. And candlestick patterns, as Steve proves here, are your compass, pointing toward high-probability decisions with clarity. After seeing these examples, the message is clear. You're not just learning patterns. You're building a visual trading edge. Now that you've seen how candlestick patterns work in real markets, you might be thinking, okay, but how do I actually start using these in my own trades with discipline, structure, and strategy? Because seeing patterns is one thing, executing on them consistently is another. In the next chapter, we'll dive into how to build a structured candlestick trading system, one that turns pattern recognition into actual profits. So ask yourself, what if you could create a personal trading blueprint based entirely on candlestick signals? Chapter 10. Final Thoughts and Trading Discipline. Imagine this. You've mastered reading candlesticks, you recognize powerful patterns, and you've seen how they work in the real world. But here's the truth. Nobody tells you enough. The most important skill isn't pattern recognition, it's discipline. This chapter is Steve Nison's final and most critical message. Trading success depends more on your mindset and habits than on any single indicator or chart pattern. Discipline, the silent game changer. Steve explains that trading with candlesticks isn't a magic formula or a get-rich-quick trick. It's a skill that demands patience, consistency, and emotional control. Patience to wait for the right setup. Confidence to trust your signals, even when the market feels uncertain. Emotional control to avoid chasing losses or acting on fear. Without discipline, even the best patterns become meaningless. The 3 pillars of trading discipline. Steve breaks down discipline into 3 pillars. 1. A trading plan. This is your roadmap. Define entry, exit, and stop-loss rules based on candlestick patterns combined with other technical signals. No guesswork. 2. Risk management. Decide beforehand how much you're willing to lose on each trade. Never risk more than a small percentage of your capital. 3. Emotional control. Markets are emotional roller coasters. Train yourself to avoid impulsive decisions. Stick to the plan, no matter what. Embrace the process, not just the profits. Steve stresses that candlestick trading is a journey, not a destination. Success comes from continuous learning and refinement. There will be wins, and there will be losses. Both are valuable teachers. Every trade, every pattern, every mistake is a step toward mastery. Practical suggestions to move forward. To truly use this book's wisdom and grow as a trader, Steve offers these actionable tips. Keep a trading journal. Record every trade, why you took it, what pattern you saw, and how you felt. This builds self-awareness and discipline. Backtest patterns. Look at historical charts to see how patterns performed. This builds confidence and sharpens your skills. Start small. Use demo accounts or small position sizes before scaling up. Protect your capital while learning. Combine tools. Use candlesticks alongside other technical indicators or fundamental analysis for a balanced approach. Stay humble and curious. Markets change, and so should you. Always be open to learning and adapting. Final takeaway. The journey with Japanese candlesticks isn't just about reading charts, it's about reading yourself as a trader. Steve Nison reminds us, mastering candlesticks is mastering yourself. When you combine knowledge with discipline, you're no longer at the mercy of the market. You're in control of your trading destiny. Now that you've reached the end of this incredible journey, ask yourself, what's next for you? Will you just watch markets move, or will you take the wheel, using candlestick wisdom and discipline to chart your own path? Your trading future starts today, and with the right mindset, the right tools, and the lessons from this book, you have everything to succeed. Thank you for watching this deep dive into Japanese candlestick charting techniques on Book Loom. If you found this helpful, don't forget to subscribe for more powerful book summaries that help you grow and succeed. And there you have it, the complete journey through Japanese candlestick charting techniques, where ancient wisdom meets modern trading success. By mastering these patterns, and more importantly, embracing discipline, you're equipped to navigate the markets with confidence and clarity. Remember, trading isn't just about charts, it's about mindset, patience, and continual growth. If you found this summary valuable, make sure to hit that subscribe button so you don't miss out on more insightful book breakdowns here on Book Loom. Now, I want to hear from you. What audiobook should we explore next? Drop your suggestions in the comments below, and let's keep learning together.
If I can run, I can cry, no. I ain't tryna tell